You're watching closing trades on 80 now, and for now we're at the highest point of the trading session. The Nifty very close to that all-time high level, just 20 points shy of that mark. 22,740 has been scaled comfortably, and the Bank Nifty by almost 200 points. The broader markets too participating. And to add to that, there's a cheer of the SIP data coming in at the record high level as well, very close to that 19,300 crore mark on a monthly basis. And of course, the SIP figure has just been inching higher. To decode that further, we have with us Mr. Swaroop Mohanty, the CEO at Mirae Asset Global Investments, joining us to talk to us more about that. Swaroop, hi, good to be speaking with you. Good to see that despite the kind of volatility that we have seen in the stock markets, the SIP data continues unabated. What's your own expectation, let's say, of what the next realistic target should be for the SIP figure on a monthly basis?
First of all, thank you so much for having me on your show. But yes, it's become the go-to way of investing for broad Indians. It's such a wonderful process of investing. It does allow investors to catch volatility like this. And then over a period of time, the rupee curve averaging does set in. So the process of investing through SIP is always the disciplined way. And hence, I think more and more Indians are catching on to it. 19,200 per month as we speak. My figure for December 2024 is 25,000. I don't see any stoppage of this at all. Great to be at the receiving end of this SIP flows of the industry.
Absolutely. And Swaroop, I think it's important to now bifurcate as well as to what kind of schemes are seeing maximum investments, because there's still that unsatiable appetite for mid and small caps in the market. Would you say maximum flows are coming into flexi cap funds, or at least that's been the trend?
Till now, I would suspect that the maximum flow till last month were towards the mid and small, more towards the small. But I think if you see this month's figure, there is a slight halt in the small cap space. And if people in the past have allocated higher to these places, it's always good to rebalance and come back to the core portfolios. And I hope that, in the next few months, we see flows reverting to the core portfolios of large, flexi, or maybe multi as such. But too much of skew towards small cap only increases the risk potential or profile of the portfolios. I hope people are cognizant of that. If they're okay with it, all good. But I would suspect a lot of it was blatant return chasing. But if that is then normalized by future flows into the core portfolios, a lot of good can happen to the stability of portfolios.
The recommendation as well going forward and looking at the market valuations within various market caps right now that have a higher allocation to large caps as opposed to small cap specifics?
Yeah, because you've already, I'm making this assumption purely on the flows that have happened in the last 2 years. Purely a lot of allocation has happened to that end of the market. People have actually, if you follow data, then it would be people have actually redeemed out of large caps to go there. And that's never advisable in the long run. Finally, every fund manager will ask you to buy a good company at a good price. You have to decide how much of your portfolio is invested in good companies. And the good companies are invariably the larger companies which have more from a balance sheet stability perspective. So if you've bought more of the smaller companies, it's time to rebalance, and that would be the right way of going ahead.
Okay, point taken. Swaroop, on that note, we let you go. Thanks so much for making time and speaking with us. So that's the latest coming in on the SIP data. We're taking stock of what's happening in the market right now. Bank Nifty is up a good 250 points, 48,980 on that one. Seems like that the Bank Nifty has made a fresh record high as we speak. So let's keep tracking what's happening there, because in the last few minutes, there has been a further uptick on the Bank Nifty. Let me bring on board Kunal Bothra to decode that for us. Kunal, what do you mean this sudden uptick that we're seeing on the Bank Nifty? And now 49,000 pretty much on the cards, but what about 50,000 next?
Yes, sudden in the last 5 minutes, but slow, calibrated in the last 4 hours so far for the index. Again, I think it's a strong telltale sign that the index trend is still a lot more positive, even after yesterday's mild bit of choppiness or volatility, call it what you may want to. But the index breaking past about the 49,000 mark, the Bank Nifty specifically crossing about those levels. I think it's a very strong indicator that the near-term trends are still a lot more bullish. We have the Bank Nifty expiry as well as the Nifty expiry. So I think that could also be one of the major reasons why you're seeing the aggressive round of momentum or the acceleration coming back into the index. I think once we break past and sustain about this 49K mark for the Bank Nifty, this could now act as a major base for the index going forward. So what we need to now see is that in case if the next couple of days we see further leg of up move, say another 300 to 400 points up move on the Bank Nifty, then we are looking at substantial rising of the base or the support for the index. So from 48,200, we could now be looking at a fresh support or a base at 49K mark for the Bank Nifty.
Okay, let's pick up that conversation forward. Siddharth Khemka as well doing another show right now. Siddharth, hi afternoon. As we are hitting that record high on the Nifty Bank, it's carried that 49,000 mark. Tell me, where within banks do you still find value at the table, on the table where one can look to add positions perhaps?
Yeah, very good afternoon. See, if you look at the overall banking space, I think the private banks and NBFCs are something that we believe would be driving the earnings in this quarter, because so far we have seen the PSU banks which have been seeing the high growth and on a high base, while growth might moderate, and we have already seen the NIMs kind of moderating and now consolidating. So overall, I think there will be select few pockets within the overall banking space. Some of the private sector banks, the good part is they have underperformed so far, and valuations are comfortable compared to some of the PSU banks, and that is where market interest is coming up in the current environment, given that large caps are still kind of languishing behind in the run-up and in terms of valuation. So I think ICICI Bank, IndusInd and Axis from the private banking space would be our preferred pecking order from the private banking space.
Okay, so that's the latest as far as which banking stocks you can still bet on. Kush Bora is also joining us on the show. Kush, what about the Nifty itself? That too is just at the edge of that all-time high level, maybe 20-25 points away. What's the next level to watch out for that as well? Because as Kunal pointed out, it is the day of weekly options expiry, and the next 45 minutes, 50 minutes are going to be fairly volatile.
Oh, absolutely. First off, thank you for having me on the show. But my concern is that while we are in an uptrend, we are not seeing the kind of momentum that one would have liked, especially once you're touching new highs. So I would have an approach on Nifty, which is fairly buy on dip. I will not chase the momentum. So through the day you get a gap up opening, it's best to perhaps wait for a dip, 50, 100 points, kind of a dip, and then buy. That strategy has actually worked quite well yesterday and today also. So that's the kind of approach that we'll have. For the month of April, we had two targets internally of 22,500 and 22,800, something that we had shared with our clients as well. The second target is also practically there. I mean, we hit 22,768 kind of a high, so it's almost there. We're looking at a 23,000 kind of a level now. But as I said, somehow, I'm not getting comfort to go out and chase this momentum. I would perhaps still be inclined to buy on any kind of, slip towards 22,600 to 22,500 zone will also be a good buy. But even on an intraday basis, I would perhaps buy the dip.
Okay, point taken. Take a look at ITC. That stock is up 2%. SBI is suddenly showing big move as well. 2% gain there. Kotak Mahindra Bank has been with that 2%, has been sitting at 2% gain for quite a while. But SBI is the big one in the last few minutes that has actually moved up. And Reliance too is batting for the Bulls right now. 1% gain coming in. Of course, yesterday that stock was under pressure, so maybe a bit of a catch up there. HDFC Bank continues to languish, so there's a 1% cut there. Maruti are some of the other names. The other pocket which was showing signs of recovery was the entire chemical space. Jubilant and Grevia, Fluorine for that matter, other names as well from that entire pack were fairly active. What's your sense, Siddharth, on the chemical space? Because we spoke with an analyst and we'll play out the bite shortly, but the consensus seems to be building up that the worst is behind for the chemical sector, and now there should be a swift uptick both in terms of the export recovery and the import substitution demand coming in.
It looks like that the worst is behind, and with Brent crude price now kind of stabilizing on a Q-on-Q basis, margins should also start seeing that reflection. Demand is expected to recover, though not that fast to see a sharp uptick in terms of overall business growth. But with Europe and China started some signs of stabilization, I think on a market outlook, things are looking better for the specialty chemical. But if you look at our estimates for this quarter, the Q4 gone by, we are expecting for the overall aggregate specialty chemicals a sales decline of 9%, EBITDA contraction of 25%, and PAT decline of 48%. But I think this earnings that we are talking about is already there in the price, and the sector has kind of performed. It will take 1 or 2 more quarters, I think, for the numbers to start stabilizing and start seeing some improvement. But as we again speak, valuations are comfortable, market have run up, and in this environment, I think a lot of investors are looking at the longer term picture and the valuation comfort, which is there in some of the large specialty names, be it Deepak Nitrite, be it SRF, and some of the other names like NSE Surfactants, which we like a lot, given that they are all doing capacity expansion over the next few years, which will drive growth in FY25 and FY26.
Right. In fact, since we're on the subject of chemicals, also hear it out from Rohan Gupta from Nuvama as to what his thoughts on the chemical rebound or possible chemical rebound is.
If you ask that is anything significantly has changed for the sector, we say no. But yes, few things are definitely positive for the sector. Like we understand that the earnings have bottomed out in Q3, and from Q4 onward, we should be seeing a sequential recovery in earnings for across the specialty chemical basket. Maybe a couple of names here and there, but otherwise across the sector, we see that the earnings have bottomed. But now it looks like the headwinds are over now, and we should be seeing the sequential recovery in place, while the structural driver already in place. So we see that the sector is definitely going to drive at least 20% plus kind of earnings growth in future for longer period of time. Picks right now, I will be positive on like Aarti, Jubilant Ingrevia, Galaxy Surfactants, Gujarat Fluoro. Some of these names we see that are going to be the beneficiary.
Back with closing trades right here, Neat. Now let's just mark what the closing trades are looking at currently, considering Nifty Bank is at a new record and both the Nifty as well as the Sensex is robust. UPL, that's the one which is on a tear right now. Almost 4% bump up is what it's seeing, along with the rest of the chemical players as well, which are holding up like we just flagged off earlier before the break. They're looking good, about a 3% move coming in there. Kotak is mighty strong, 2% of a move coming in there, and metals as well continue their uptake. So yesterday was Hindustan Copper, Hindalco. Today also you're seeing a smart follow through on Hindalco, which is holding up about 1.5% as we speak. What is L&T up to? That's a bit of a laggard. It's down about 0.7%, and Reliance as well will just come up for your screens. Let's see what that stock is up to, because HDFC Bank 2 is in the red, Reliance holding out almost 1% right now in trade. Maruti, that's also a rank underperformer, down 2.25%. That, along with Bajaj Finance as well, is not doing a whole lot. But soon it's going to be all about IT, with TCS slated to come out with its numbers on Friday itself. Siddharth, what's the expectation there?
The overall IT, I think things are kind of stabilizing in terms of overall numbers. But if you look at the overall outlook, uncertain macroeconomic outlook continues to dampen the environment for IT services in Q4. While the sequential revenue growth could see some improvement because of the Q3 of a low base of a Q3. As we all know, Q3 is seasonally a low quarter. The Y-on-Y growth would remain, and we believe that the sector should report a weakest annual growth rate of 4.5, about 5% for the year, which would be the weakest since the financial crisis of 2008-2009. And demand improvement in FY25 only factored in towards the later half of the year, based on what the management commentary suggests. So only once US Fed starts cutting rate, I think the yields would also ease off, and the spending from the corporates would start improving, and that is when the demand outlook would look better. In terms of tier 1 IT companies, we are expecting sequentially to improve on a base, but again, the overall growth rate will remain below the historical range. TCS is expected to outperform in the tier 1 with a 0.2% Q on Q constant currency growth, while Nifty and Wipro would report a flattish kind of a number.
Point taken. The other, pocket which is fairly excited today is the energy name. So BPCL is high by 3% as we flagged out. Add to that list, Petronet has been running away quite strongly, 6% more. Hindustan Petro is up a good 6%. Kush, what's your take within this pack? What is the chart that looks the strongest? Which is that one?
Well, interestingly, a lot of these names had shown promise, but then, they fizzled out. Now we're seeing some sort of a stability, and some of these names are starting to do well. So I do have IOC, BPCL, these on my radar for sure, and I'm at least looking for a break on BPCL. IOC looks strong, but the other name that you mentioned, that's a very clear runaway winner, is Petronet LNG. There was a resistance of that 290, 295 kind of today. With volume, the stock's actually broken out and sustaining. So I think good days to come for this stock. I think 320 is the next level one should watch for. So for me, in this space, Petronet is a clear runaway winner.
What's the trend for metals? I mean, yesterday it was a Hindalco along with, I think, a Hindustan Copper, which has been in an uptrend, and you've also recommended that stock. Today seems to be NMDC and Vedanta.
Yeah, it's a sector churn, and this classically happens, Aisha, when a strong sector, uptrend is in motion. Because typically, what happens is there are few stocks which get identified as leaders, the ones which move up higher. There is a significant buffer or margin of profit which these stocks they generally tend to deliver in terms of the trading gains. And then post that, once these stocks are at a higher range, that's where the laggards they tend to move up higher, or the underperforming stocks rather they tend to move up higher. For example, in the last couple of days, you've seen the likes of Vedanta moving up from, I think, 300, 310 levels now, 360 plus mark. Tata Steel has been looking attractive over the recent or over the very short term. But the likes of JSPA, Hindustan Copper, these stocks have taken a bit of a pause for themselves. So I think it's a classic rotation at play. This also indicates that the move is not at a fatigue for these metal stocks. But when you see a classic sector rotation, this means that there's a bigger trend at play for the entire sector, which means I think who have probably missed out earlier on the likes of Hindustan Copper, Hindalco, etc. They could use these marginal bits of correction. So, for example, if there's a 10% rise in these stocks already, then a 3% to 5% kind of a dip into these stocks should be taken as a good buying opportunity.
Okay, point taken. So that's the view coming in. Metal undergoing that churn within the entire package. But specific reasons as to why NMDC and Vedanta are buzzing today, that's something Ashisha is joining us to talk to us more about that. Ashisha?
Let's talk about NMDC. The stock is up nearly 4 to 6% in today's trading sessions. One of the reasons, of course, is that analysts believe that iron ore prices have now perhaps bottomed out. Remember, iron ore prices were trading at that $140 per ton in January this year. They fell below $100 per ton in April, and now analysts believe that iron ore prices have bottomed out. Good manufacturing and macro data from across the globe, not only China but developed and emerging markets, is also aiding the rally in commodity prices globally, and that is why Indian metal stocks have also been soaring in trade of late. Remember, NMDC is a pure iron ore play after the demerger with NMDC Steel, and very many positive factors. The balance sheet is very strong. Analysts expect volume CAGR of about 8% over the period FY24 to 27, and EBITDA CAGR of about 10%. Dividend yield, its dividend yield of about 4%. So very positive parameters across the board. One of the important factors being bottoming out of iron ore prices. That is why NMDC is gaining in trade today. Apart from that, let's also talk about Vedanta, because CLSA has gone ahead and upgraded the counter to buy versus their earlier reduced rating. They've also hiked that price to about 390 from their earlier target price of 260, where they believe growth and margin expansion capex will lead to earnings growth going forward. Their corporate structure and leverage will be key monitorables, but they've gone ahead and hiked their EBITDA estimates by 4 to 13% over the period FY24 to 26. So on the back of very positive upgrade that has come in from CLSA on Vedanta, we are seeing that bump up on this counter as well.
Oh yeah, absolutely. Good going for the metals space as we speak right now, after iron ore prices, it seems, have likely bottomed out. But Siddharth, what's your own take on not just metals but the entire commodity basket, be it gold, silver, cocoa? Many of these commodities are sitting at all-time highs, if not fresh highs.
Yes, I think if you look at the overall commodities pack, while some of the commodities are still reeling under pressure, for example, the domestic TRC prices have kind of declined 5% on a Q-on-Q basis in Q4. The rebar prices, CRC prices are all kind of down. But on the other hand, we have seen some of the precious metals like gold, silver, and industrial commodities like copper prices kind of seeing a sharp improvement. There is some expectation of improvement in demand from China after this large stimulus that the government announced there last month, and plus some stabilization in the US and Europe. Plus the expected the commentary from the US Fed that there could be 3 rate cuts this year. That kind of also supported some growth expectations for some of the commodities sector. In terms of earnings, I think Q4 will be a lackluster quarter, but again, another sector where the stock prices are kind of already factoring in the weak Q4 numbers. The hope is that from here things would start improving on a sequential basis. Plus the valuation and some of the specific commodities like copper, silver, and especially on the aluminum side, I think things are improving. So we kind of like select few stocks within the space. Hindalco is our preferred pick within the space, followed by a Coal India, which is generally also providing a lot of inputs to the power sector where we are seeing a lot of demand. And within the ferrous space, we like Jindal Steel and Power.
That was about the metal sector stocks that you like at this point of time. But shifting focus to some of the names, put up the chart of SBFC Finance. That small stock is showing a bit of a move as well. And Jubilant Ingrevia, of course, has been doing quite well. It's a 12% surge there. In fact, Kush, what's your take on the chemical basket as a whole? I mean, a lot of those names, right from a Naveen Fluorine to a Atul Limited to, of course, this Jubilant Ingrevia buzzing. What is your top recommendation?
Well, a couple of stocks on our, while the sector did have a lot of promise, early on, only now is, is starting to catch steam. So what we have on our radar is Aarti Industries. That is one stock, that we like from a momentum perspective. Very clear breakout, very clear runaway. The stock is that 800 kind of a move, and about 700 to 710 is a good support zone. So Aarti Industries is something that I have on my radar. Now, one dark horse, and it's not a recommendation just yet, but I'm watching it for another couple of days, sort of an up move, is UPL. It's been a underperformer, but the kind of pace that we've seen and the sector tailwind coming in, there is a possibility that this stock could also move a little higher. But just now, I'll hold back on recommending. It's just something that I've got on my radar. But Aarti Industry has been and will continue to remain one of our topics in this space.
Okay, point taken. Siddharth, this is a question we've been posing a whole host of experts as well. So thought I'll take your view as well. Sensex, when do you see that hitting 1 lakh mark? Because we're already past, 75,000. We are scaling franchise, whether it's Nifty Midcap, going through that 50,000 mark, Bank Nifty hitting 49,000. When do we hit that 1 lakh mark on the Sensex, per your understanding?
So, Anisha, if you look at the earnings expectation, FY24, we saw a robust earnings growth of 20%. But on a high base and with margins kind of consolidated, we are expecting at least 15 to 18% growth rate in the Nifty earnings over the next few years. So I think that's the kind of compounding in the market we could see. Nifty is trading at a PE of 1 year forward PE of about 20 times, which is closer to its long-term average of about 18.5, 19 times. So I think re-rating only if the earnings growth again accelerate above 50% and an earnings growth of 15 to 18%, we should reach that mark, I think, in another 3 years' time.
3 years, that's the time Sensex will hit 1 lakh mark. But Siddharth, on that note, we let you go. Thanks so much for making time and speaking with us today. But as we slip into this very small break, also listen into the views coming in of other experts as to what their expectation is of Sensex at 1 lakh.
Now, that to me is very reasonable. Yeah, very. I would be disappointed if the Sensex had not touched 100,000 5 years from now.
I'm absolutely certain it will reach 1 lakh. Now, whether it happens in 4 years or 6 years, frankly, is really a meaningless debate. But looking at the nominal GDP growth rate, which we are looking, you can safely say we can grow between 12 and 14%, maybe 10 and 14%. you will approximate that number and you compound it at that. So in 4 years, roughly from 60,000, you add another, say, it comes to approximately 1 lakh in 4 years. I mean, it's not a reach to see 1 lakh, just at the simple compounding of the nominal GDP. I think it's a given, 100%.
मार्केट को प्रिडिक्ट करने की कोशिश मत करो. More often than not, you will be wrong. But today, is 1 lakh Sensex looking unimaginable? Answer is no. And my request to this audience will be, just don't think about 1 lakh Sensex. Beyond that also there is a much longer journey.
Generally speaking, if a country is growing at 7%, you can expect companies, reasonably good companies, to be growing at 14%, double the growth rate of the country. So it's very possible that you can get this incredible growth in the size of the market and the actual investments in the market, no question.
Take it with a pinch of salt. We are fully priced now. A large part of the global macros, the demographic premium, the input of SIPs is all played out. So first there should be some healthy correction in the market before the election, and only then we will scale higher. We need earnings to catch up, and I think that I would say 85,000 is coming by the end of the year, but maybe a year and a half before we get to that 1 lakh number. So I know now these are very, very attractive numbers, and now everyone is gung-ho, but this is the time to be a little cautious and take some money off the table. Simply put, one, inflation is rising, oil is up, and we know that the rate cut in the US is now being prolonged. Along with that, I would say earnings seasons is fully priced as far as the positives. Any negative surprise could be dealt with little harshly. So taking some money off the table right now is a good move. We are in a festive mood, and 75,000 could be a very, very sweet benchmark, which may remain for some time.
Well, a sharp surge is what we have at our hands for the Nifty. It's hitting all-time high level now, 22,770 thereabouts on the Nifty. That 3 p.m. move really kicking in on account of the weekly options expiry, and that candlestick chart will come up to you on the screen. It's Coal India, which is higher by 4%, BPCL gaining almost 3%, ITC doing its bid with that 2.5% gain, and of course Reliance is also participating for the bulls. That stock is adding almost 30 points to the Nifty up move, and ITC too is supporting it by 25-point up move. So we are seeing good amount of recovery at the index level and a fresh record high for the Nifty as well. But Kunal, where do we go from here? This is purely on account of that weekly options expiry move that we are witnessing, or there are more legs perhaps for this rally on the Nifty?
Yeah, that has to be its part, weekly option expiry. That's an obvious trend, because I think for the Bank Nifty it's a lot more prominent this time around because of the break of that 49,000 mark. And round figure strikes are the ones where there is a very strong kind of an active trading which generally tends to happen. And during the expiry week, the index generally claws back or crosses above a strong psychological mark like 4,500, 49,000, etc. These kind of round numbers. Expect that those become a strong base going forward. So I think this may not just be a one-day intraday move for the index, both the Nifty and the Bank Nifty, but I believe that we should have more legs on the upside.
Yeah, surging ahead. I don't know if we can bring out the tick chart, because with each passing minute you're seeing the Nifty scale up even higher as we speak right now. 22,769 is where we're currently at. On that note, let's bring on board Devin Choksi as well. Devin, hi, good to have you on the show. Both the Nifty as well as the Nifty Bank sitting at record highs. Time to go cautious, or do you think the move is pretty much under control and the rally still has more legs to go?
So good afternoon, Asha. Well, on one side, I think we are fully invested. Honestly, I think no additional money at this point of time to put into this market. And fortunately so, because I think the market is, getting the momentum and the traction on the higher side. If you have liquidity in your hand, I think you can easily make a mistake and I think put money into the market at this point of time. I'm not saying that the fundamentals or the directions of the market is weak. The fact remains that I think the market is scaling too quickly and too early. Maybe I think that's where one is not fully comfortable. So I think individual stock specific approach is one which we always believe is going to be more rewarding now onwards as well. So individual stocks, I think they remain relatively more comfortable to us vis-a-vis the overall market view that we carry at this point of time. Maybe some stocks in the area of automobile ancillary, but some companies, I think, which are in the engineering R&D space in IT, that's where probably I think we like to put some money into those stocks. If the market is giving correction, it is also a more happy situation to add new funds into those companies.
Right, okay. That's the view coming in on the market right now. But even soon we'll have earnings as well, trickle in. Anywhere you see exuberance or anywhere you see that the earnings aren't quite going to match up with the expectations the street has?
So on one side, I think most of the expectations are down to the street. On the other side, I think there are certain possibilities that we are factoring in. Like, for example, the commodity play is going to probably show some relatively better amount of direction in the guidance in this particular quarter and hereafter. The metal commodity, the ferrous and non-ferrous, suggesting that their volume is now probably reaching to the peak level. And as a result of which, I think they are talking about debottlenecking the capacity with the brownfield expansion. At the same time, I think greenfield expansion being planned in subsequent years. So this particular space looks interesting. Fortunately, I think the cost of energy for them is coming down due to the mix of renewable along with, I think, the conventional energy that they are having in the balance sheet, which is probably giving them a margin comfort, if not anything else, at this point of time. So we remain to be more bullish on this prospect and possibility and would like to validate our understanding on the subject through the management commentary in the direction going forward once I think the result comes out. Similarly, is the situation we are factoring in the specialty chemical business. In specialty chemical business, I think whatever the pain points were there, so I think the inventory and the sales at a lower cost in last 3 quarters, most likely I think we are going to see the reversal in the 4th quarter with the jump in the higher amount of, I think, growth on one side, and at the same time, I think the lower input cost, which will give them the margin advantage. So this is one area where probably I think we are keenly watching the situation. Otherwise, there is nothing which is called exuberance or something which is not factored in. We believe that overall the markets are likely to remain healthy. Maybe I think in some pockets like IT, surprise by way of having slightly better than expected direction the guidance than the street is expecting.
Okay, taken. Just marking Piramal Pharma, that one is reacting to the news flow that the company has forayed into the men's grooming segment with the latest brand coming in. So that's one stock that you need to have on your radar. Data Patterns is up a solid 12%. HEG is the other one which is firing away. Reliance Infrastructure, of course, is down 20% on account of that arbitration. And Spark is the other one which is down about 5%. But a lot of other price volume buzzers, given the fact that the market is hitting fresh record highs, and even the mid-cap and the small-cap index has been having a great run. In fact, if I have it right, Ansh, small-cap index has been closing in the green for the last 10 to 13 sessions, right? What are the other price volume buzzers you have for us?
Yes, this is actually 13th session and we are seeing Nifty small cap advancing on a continuous basis. First stock we have is Hindustan Petro. Actually, the stock has given a breakout from its reverse head and shoulder chart pattern, which was intact for over a month now. The stock has also surpassed about its 20 DMA with volume of over 80% as compared to its 10 session average volume. Also, from this we have Tanla platform also in focus. The stock has actually given a breakout from its cup and handle chart pattern, surpassing about 50 and 100 DMA. The stock has also registered volume of over 10 times its average trading volume of last 20 session, indicating very strong participation in today's breakout. Lastly, Natco Pharma will be in focus as the stock has actually given a breakdown from its 6 session consolidation pattern, slipping below its 20 DMA level, and it has also formed a bearish engulf candlestick pattern on weekly time frame, which usually indicates a potential reversal trend on downside. So keep an eye on the stocks.
Buzz stocks out there. There's of course Godavari Power, wherein their operations have resumed at the facility which had caught fire back in August last year. There's also Bharti, which is holding out very well. Teak has initiated a buy with a target price of 1505 on this one, saying that Africa has big runway for growth. Tariff hike seems imminent, and Bharat is going to be the biggest beneficiary. Devin, since you do track the telecom story closely, just wanted to understand purely on the basis of the kind of tariff hike which seems like going to be coming soon, or at least our monthly bills are definitely spiking up. Wanted to understand what you make of the telecom sector, along with all the news flow that we're seeing around Vodafone Idea with the fundraise.
Yeah, frankly, the Vodafone would be, I think, an interesting one to watch out for. They are trying to put in their strategy for, I think, overcoming the kind of situation in which they are currently in. How soon, how fast, how much money they would require, etc., is always going to be, I think, a good challenge to get it right. Honestly speaking, I think even though we listen to the commentary of management, still fully clear about how exactly they are going to be playing out this game. On one side, the Bhartis and the Geos, both of them have already deployed a significant amount of money in building the 5G infrastructure, and they are now probably creating the larger amount of base for themselves. Whether Vodafone Idea would be in a position to catch up on that front, bring back those customers to them, big challenge as I see it. At this point of time, it is only a duopoly as I see it between Bharti and Jio. And honestly speaking, whatever kind of a price increase action that it takes, it will have its positive impact in the balance sheet. More favorable for Jio than for Bharti at this point of time in my understanding.
Okay, so that's the take coming in on Bharti Airtel and Vodafone Idea. Need to keep an eye out on that fundraising that, of course, has been much talked about. But in terms of other buzzers, not many, to be honest. It's the same set of names which are holding up. So metals as a pack, real estate as a pack has been doing quite well. In fact, Kunal, I was just going through the real estate performance of the stocks for this year. Sobha up 60% already for the year, and even the entire sector has already managed to gain, what, 25%. This is coming on that 70% rally that we saw last year. Are you expecting a bit of a reversal anytime soon, that people should start booking profits here, or there's another leg up?
No, I think there's still a lot more room on the upside for many of the real estate names. So, we go back to 2003, 2008. That was a classical, 5-year period where many of the real estate stocks, they gave returns in terms of, percentage, but in terms of multiples, where at that time you had the likes of Unitech, etc., which had gone, into multiple kind of rallies. Now, what we've seen so far in the last 2 years specifically, is the real estate stocks coming on their own. ELF, Anantraj were the first ones to move up higher. This time around, the good change is that Godrej Properties, for example, Sobha, that's another real estate stocks which are now leading the this year's performance so far, which means that leaders are changing in yearly basis, and that I believe is a very good churn for the entire sector, and that also gives room for traders who missed out earlier on the stocks or are looking at trying to trade at the underperformers to try and play a catch up. So I think that's where the sector plays generally gets a lot more stronger. I would maintain that bullish stance on the estate pack and expecting many of these stocks to now come back into breakout mode, like we've seen for the likes of Godrej Properties, Sobha, etc.
Even I think that's the problem, right? Because each time that you think real estate stocks have moved up a lot, they move up even further, and the kind of bookings and the Q4 updates that we've seen, it seems like there's still more legs to go. Where within Realty do you find comfort to add afresh?
Well, I think the larger players probably have the bigger handle at this point of time in form of number of square feet under construction and the number of square feet for selling. So obviously the ones with Godrej Property, or for that matter even Realty, who have got the larger amount of projects under execution, they give you more visibility. Some of the regional players also are offering better than before visibility as far as I think the amount of projects are concerned and the execution is concerned. Maybe the trigger point, if at all one wants to call it that way, would be the time when you see the RBI rate action start coming in and the rate reduction starts happening. Because every percentage rate reduction that one would see is directly, indirectly going to have very positive impact onto these companies, real estate companies who are into developments, along with some of the NBFC companies who are into the housing finance business. So we believe that the momentum is going to continue. We believe that I think the growth is likely to continue for them. Only challenge that I see in most of the counter, likewise in real estate counter as well, where I see the valuations are peaking out ahead of time. And some of the companies at this point of time are putting way into the 25-26 financial year already. So obviously, I think we are moving a little ahead of time, but that is a character of the bull market. I think it might give correction also in between. One will have to watch out for that correction. If one gets, that would be, I think, a better time to buy into some of the realty companies.
Okay, so that's the take on the real estate pack. But what's the government's aspiration when it comes to gas trading? Because it looks like India wants to become a gas trading hub over the course of next few years. My colleague Prakash is joining us with the exclusive information on this. Prakash, tell us what you're picking up.
Yes, an interesting development coming in as the next government is likely to take bigger strides in order to make India an national gas trading hub. Sources are informing that the oil ministry has started working on this proposal to make India an national gas trading hub, especially for the Southeast Asian market. We are given to understand that a presentation has been made before the Cabinet Secretary, and as per the initial proposal, pipeline infrastructure, LNG terminals, regasification facilities, gas storage facilities, networks are making India a hotspot. The Oil Ministry has started working on this proposal, and strategies have been prepared to become international gas trading hub in next 5 years. In addition to that, gas storage facilities are going to be going to play a very vital role in this whole plan. And the government is planning to provide gas storage facilities to the global companies on a rental basis. Therefore, companies like ONGC, OIL, GAIL have already been informed by the government to come out with the feasibility report to set up gas storage facility across the country. And subsequently, these companies have already invited tender for the appointment of technical advisors. As per the initial proposal, 5 locations have been identified to set up a gas storage facility across the country. And after that, global bids would be invited by the next government. Back to you.
Okay, so that's the latest as far as the gas trading is concerned. Thanks so much for joining us today. Maybe, you know, the infrastructure providers, of course, the ports, as well as Aegis Logistics, etc., should be in focus on account of that, because they are the ones that, of course, deal in this as far as the import and export is concerned. And, of course, the entire ecosystem of the, gas pipeline, EPC, as well as the other infrastructure players will be benefited if this does go through. But in terms of the markets right now, the move continues to be quite buoyant. We are holding on comfortably to that 22,750 mark. So there's no big sell-off that is happening at the moment. The Bank Nifty up almost 200 points. Devin, within the banking index, wanted your understanding into where the preference lies, because the likes of HDFC Bank haven't moved much. ICICI Bank has moved, but nonetheless, the quality of earnings have improved time and again. And then, of course, the big old SBI is there as well. What do you like within banking right now?
So clearly, I think the potential stays very high with Geofin within the banking NBFC space, along with Bajaj Finance. I believe that I think both these companies have relatively much bigger play to offer compared to their peers in private sector banks, largely because of the fact that one, their size of the book is also reasonably big, and B, the amount of margin that they are enjoying is definitely give them a protection against any kind of NIM squeeze. So to a greater extent, I think these two companies remain relatively more stronger proposition. Jio, of course, I think is yet to start the business, but as I understand, they are fully ready with the infrastructure for offloading the business or starting the business. In each of the 4 verticals, I think they're probably likely to see the start with a bang, and maybe I think in 2 years' time they would probably achieve some kind of ranks. That's what my understanding is on the subject. So yes, I think it's more of an accumulation based on those promises or the understanding that I have talked about in GM. But these two companies likely to give relatively better performance as far as investors' portfolio is concerned compared to others.
Coming in on the financials. In the meantime, still scaling up for UPL, which is now up a good 4% as we speak. Some of the oil sensitives are seeing a bit of a relief, given that there has been a cool off in crude prices, which are now sub the $90 per barrel mark. Remember, just earlier this week, they had spiked up all the way to 91 plus odd levels. There's BPCL holding out, the entire OMC pack looking good. And I want to see what Interglobe Aviation as well is up too, although the news flow is not quite supportive in this one. But this is one stock which has been holding very smartly from the word go and continues to be the case with a 4.5% uptick is where that stock is. Let's get in our check going on Interglobe Aviation and if any of the OMCs that you like and think are trade-worthy.
Sure, Aisha. So on Interglobe Aviation, I think this is the stock of the month because I've heard a lot of experts speak about it on your channel, on your sister channel. My only concern now is that with the kind of up move that we've seen, including today, is the stock actually approaching the overheated territory. So there could be some profit booking that could come around. Any kind of dip towards the 3,700, 725 kind of level would be a good entry point. So for me, Interglobe Aviation does continue to remain bullish, but it's a buy on dips. As far as the oil marketing companies go, we have a buy on IOC. This stock is now, if you see on the weekly charts, showing a higher high kind of a formation. Even on daily setup, it's trading above its near-term averages. So I think IOC is a stock that you can have on your radar. 177, 181 are the targets that we're looking at. 170 is a good support zone, should act as a stop loss. So that's one stock from the OMC space that we have on our radar.
Stock some of the losers as well, and pharma clearly is not doing very well for itself today. So whether it's an Aurobindo Pharma, Divi's Lab, a Cipla, they're all in the red. Not by a whole lot, but nonetheless there's a bit of a pressure across the pharma pack. In Lupin, which had a good news of one of the drug approvals coming in, Dr. Reddy's and Pharma, they're all in the red right now. Devane, are you watching out for any of the pharma names to probably add it to your buy list?
Not immediately. I think we continue to like the underlying proposition in pharma, in Dr. Reddy's in particular, and believe that I think these two companies are offering, in Cipla, of course, they are offering, I think, a good amount of clarity from the point of view of complex generics and the continued growth therein, along with the market. So there we have larger clarity. But actually, I think all companies have done well on the pricing, but the market price actually is reflecting adequate valuation. So unless we see the new trigger immediately emerge, I don't think that the stocks holds the re-rating proposition at this point of time. Maybe I think they've given steady rate of return also, and in fact, a handsome rate of return in the last few quarters. But overall, I believe that I think buying should be done when the market is opportunity at lower levels.
Right, let's get in some BTST trades as well going, given the trading off tomorrow. Kunal, what's on your list?
So two buy calls. The first one is buy on Linde India. That's a stock which is coming back into a buy on dips kind of a mode. So the stock had a fantastic uptrend of 10% plus almost last week, and now it's come back again, corrected to 200-300 points from its previous swing highs. So the risk reward is attractive to go for a long at current levels. Targets of 7,250, stop loss at 6,750. And the second would be a buy on IDFC First Bank, a classic kind of a breakout about that 83.5, which is the previous resistance for the stock. So it's completing a rounding bottom kind of a formation on the daily time frame. So to buy 93 as a target, stop loss at 78.
Right. Kush, what about your stock strategies? Any BTST ideas?
IOC is one that we've already discussed. Targets, just to reiterate, 177 and 181. 170 is the stop loss. The second one is GMDC. Here too, we've seen a lot of traction today. The stocks actually come off the highs, but the kind of breakout and volume back to move that we've seen, I think further the stock further higher levels of 425 and 440 also. 399 is where I would place the stop loss.
Okay, let's begin winding up for the day. Kush, great to have you on the show. Devane, Kunal, we'll let you go as well. Let me hand it over to Vinny and find out how the day has been.
To be well at the end of the day, seeing 22,750 around those levels is what we're going to be seeing. Nifty closing at up almost 4/10 to 5/10% in trade. Sensex 2 managing to hold on to that 75,000 mark even today. Trade what we saw, 40% of uptick there. What you are clearly seeing today is the Nifty mid up almost 1% on outperformer versus the benchmark indices. The Nifty mid-cap up almost 1% and the small cap too holding on to gains of almost 0.7% in trade. Look at the names that are popping up over there. HDFC Bank, a bit of a laggard, but ICICI Bank, indices, Tata Steel managing to hold on to good gains. We also have Reliance, the top gainers and top contributors for the Nifty50 that is doing well. Other than that, let's pull up something like an ITC because that saw a bit of run up in the trade in the second half of the trading session. We saw ITC seeing a run up and 2.3% gains for ITC there. Kotak Bank as well as Bharti Airtel for the Nifty 50 among the top contributors today. Yes, strong up move coming in all these stocks in the Nifty 50 and supporting the markets. Other than that, let's pull up something like the Nifty Media, and that sector was a top sectorial gainer today. In that Nifty Media, when you look at it, we have Sun TV as well as Z, which managed to see very good gains. PSU Banks also leading a bit in terms of at number 2 for the sectorial gainer, and we did have PNB Bank, BOB, Bank of India, SBI, which is holding good gains. All these among the top movers in the PSU banks. Let's pull up metals. They have not lost their shine, continuing to trade upwards, whether you look at Vedanta, NMDC, Hindalco, SAIL, all of them holding on to very, very strong gains. Obviously, for Vedanta, we did have a brokerage note. NMDC, we did have the iron ore prices, which analysts are saying seem to have bottomed out. That works out well for Vedanta as well as NMDC, and that is why both these stocks are holding gains. A lot of triggers coming in for the metal pack. Ramco Cements, in terms of news that we had today, Ramco Cement soared as much as around 19 to 20% if I'm not wrong. Ramco Systems, I beg your pardon, that's the one in focus, because we were saying that they've signed a deal with Korea Air, and that is the reason that the stock is seeing 20% of gains. And that we have chemical names today that saw a sharp buzz: Jubilant Ingredient, Gujarat Fluoro, Deepak Nitrite, SRF. Any of the chemical names that you see today have been buzzing in trade. Very, very strong gains for the stock. Piramal Pharma, another one that they have entered into men's grooming, that saw a sharp spike up. Kolte Patil, MCX, all of them buzzing trade today on the back of a brokerage note. So let's keep an eye out on that. But interesting, 22,730, 750 levels is what the Nifty is closing at. Sensex holding on to just slightly below 75,000 mark right now at the end of the day. That's how we are closing the